What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Tuesday, May 28th. All right, guys, so SPY on Friday, we finished the day up $3.48 per share. That's plus 0.66% in regular trading hours, essentially flat in the after hours. Either way, take that with a grain of salt. Volume is low regardless. Let's take a look at SPY, therefore kind of the overall market, as we head into this coming week, particularly Tuesday. First of all, as far as macro events going on Tuesday at 9:55 a.m. Eastern time, we're expected to see the Fed's Kashkari start speaking. At 10 a.m. Eastern time, we get USCB consumer confidence. The forecast for that is 96. At 1:05 p.m. Eastern time, we expect the Fed's Cook to speak. And that's really about it as far as macro events occurring here on Tuesday. But let's take a look. Let's pull out as much bias as we possibly can, starting with trying to get some bullish or bearish bias out of the volume profile. We'll take a look at the psychological levels that, everyone's kind of watching, so we need to pay attention to. A lot of trading decisions will be made around those levels, likely come Tuesday if we see tests. Implied volatility is something else we'll look at. Expected move for Tuesday, as well as the directional bias coming out of the chain for Tuesday. So listen, let's get started here on the 5-minute chart with our volume profile analysis. By the way, guys, SPY is a daily upload, so if you are new here, I appreciate you subscribing to the channel. My goal here is 10,000, and I know we can hit it, but not without your help. So I greatly appreciate it, and I will keep the SPY videos coming. Now, taking a look here, let's pull up the volume profile. Again, we're looking for any bias that we can get. It was a decent green day, okay? Anything over 1% plus or minus on SPY is going to be a pretty volatile day. So 0.2% to the upside, not a bad green day. Of course, not the biggest we've seen, but not tremendously small either. So bulls, really what we want to see is at least a little bit of bullish bias to kind of go with it being a half decent green day. Whereas bears, you guys can't really expect such tremendous bearish bias, being that it's again, decent green day. So really, if you're a bear, what would you actually be looking for? Well, ideally, no bias to support the bullish thesis that we know already occurred as far as the price action is concerned. So looking here, very contextual open. We get a quick fade in volume, a couple of pops, not enough to really assign anything. But looking through here, we start getting this pop in volume that accelerates and then quickly fades off as the red bars hit. That was also on the most aggressive green move of the day. This here is relatively clear bullish bias. It's not ridiculous. It's not 90% on a scale of 0 to 100. We're probably looking at, I would say, about 30% bullish bias across those bars. Then moving through the day, we begin to see even smaller, maybe 15% bullish bias in the kind of like early to mid-afternoon. And then as we move through the day, again, this bar here, I know bears, we'd love to assign bias, but to be fair, we have a wick here, bit of a battle bar. You're going to see a lot of buying and selling going on that bar, and it's a single outlier. It's kind of a lone wolf. I don't like to assign bias to those bars. It's far too risky, and you end up assigning bias to like all these little bars as well, and you really don't get anything done. Moving into the close is very normal. These two are going to be rebalancing bars immediately, or I suppose straddling the closing bell. I tend to ignore those. Okay, so a small amount of bullish bias on the profile kind of fits what we saw as far as price action is concerned. So let's move on now to something I would argue much more simple and highly effective. It's going to be the self-fulfilling prophecy, psychological levels that have the most eyeballs possible. So starting here on the 30-minute chart, we have the white line, that's the 50 period, and the gray line is the 200 period. Now, last Thursday was kind of ugly. You see, we gave up both of those levels, sort of dragging that 50 period downside. Well, here on Friday, we reclaimed the 50 on the open, tested it off the open, and bounced on a little bit of accelerating volume up toward making a test that 200 period. That's exactly what we talked about back on Thursday's video. Heading into Friday, we ended up seeing that we made a test of 200, and we got held up there right at that psychological level, very much so. We tried to test it for probably more than half of the trading day, and got inevitably we rejected. Okay, but not tremendously. The volume wasn't very, very high on the rejection. We just pulled back into the close and saw a little pop. Bulls, a couple of things to watch here. Ideally, come Tuesday, I'm going to want to see a rip upside through the 200, kind of rendering this rejection a thing of the past, at least in the short term, getting up through on high volume, low volume retest, high volume bounce. In doing so, that would accomplish a couple of things. Not only would we reclaim the 200 period, but it would also rip that 50 period higher. And I want the 50 period to get back above the 200 in that case, not for the sake of what a lot of people call a golden crossover, which is really only relevant on the daily chart, I would say. But I think it's overhyped regardless, even on the daily chart, not for the sake of the crossover. I want it to get higher due to the fact that it's a quicker moving average, and we tend to see the most bullish moves occur once we get into position where it goes ETF above both, and then the 50, and then the 200, and they're all in an ascending position where the ETF is treating the 50 as an ascending support level. In order to get to that scenario, we're going to have to see that rip upside and see that play out. Bears. Any upside test of the 200 period, you're going to want to see that reject hard, and the goal is to get downside through the 50, low volume retest, high volume rejection off the 50. All right, now let's move on to the 4-hour chart and take a look here. You can see that back on Thursday, we gave that up, and we discussed that. Now, here on Friday, we're basically right on top of the thing. We didn't quite reclaim it. It was close. Technically, we're above it heading into the close, but it was very, very close. Listen, on the 4-hour chart, guys, Tuesday, I keep wanting to say Monday. Tuesday is going to be the battle of the 50 period. Bulls, I just want to see that 50 treated as support, bouncing away. I don't really care by how much, as long as ideally it's on a decent amount of volume, not below average volume. Right? I want a decent sample size agreeing with that bounce, treating that 50 as support. Bears, very similar for you guys. You just want to see that 50 act as resistance, reject hard back below the 50. And then again, any upside test after rejecting below, you just want to reject right off of it yet again. Okay, each additional test, if you see low volume on the test and then a high volume rejection, we can reject it 10 times in a single day. I don't care, as long as you see that kind of trend play out, rejecting hard, where everyone's kind of accepting that that's a resistance, at least in the short term. For you bears, that's what you're looking at. Now, arguably the most important chart of all, the daily. The daily tells the most clear story. And if we're looking here at the daily, guys, we've talked a lot about 530 to 532-ish. Now it's kind of up toward 533. That couple dollar channel has been a problem for over a week. Okay, like almost a week and a half now, that thing has been an issue. Or actually, it has kind of been like a week and a half, a little more. So the story here becomes pretty simple. You guys remember at the beginning of the video, I said anything plus or minus 1% or more is a pretty substantial day for SPY? Well, if you look here, to get to like all-time highs / break out of that channel, it only requires a 0.7% move. Okay, so it's well within reason that we could see that come Tuesday. Now, ultimately, that's kind of the goal for bulls. That's really the only goal for bulls. But bears, if you guys can continue to reject, ideally off the lower end of that channel from 530 to 532, 533, meaning reject off just 530, the harder you guys can do that and maybe even go downside claim below 525, the better, because that sets you guys up for a potential downside test of 525, 520, and then ultimately what you're really after, getting back below the 50-day moving average. All right, implied volatility. You can see here it's down a little bit on Friday. Compared to the last week, we're pretty flat for IV. Right, again, important for you option traders to understand where it stands in relation to your intended trade time frame. Compared to the last week, basically flat. Compared to the last month, very low. Compared to the last 3 months, very low. So be aware of that, especially if you're trading options. Now, expected move for Tuesday. Let's take a look. We, of course, have daily expirations on SPY, which is a luxury. The expected move by Tuesday's close compared to Friday's close, being priced in by the market right now, is plus or minus $2.37 per share. Okay, so it's not tremendous, but that right there, and by the way, by design, guys, there's no directional bias baked into that. That's the volatility expectation. So if you disagree with that, that's an interesting thing. That's a good thing. If you actually agree directly with what the market is expecting in terms of volatility, that's not necessarily ideal, because that doesn't really leave you open for a potential options play. Whether if you it doesn't matter if you think it's going to be much less or much higher. Either way, disagreeing with the market, kind of by definition, like that's a potential position that you could put on. All right, now, you might be saying, well, what about directional bias? Let's take a look at volume. About 6.5 million total contracts were traded back on Friday here. 2.7 million were calls. 3.79 million were puts. So we're seeing a bearish bias on the overall call put ratio. If we break that down by time frame, right, we go to the 0 to 20 delta range, the short-term speculators. 866,000 calls, 1.62 million puts. Pretty heavy bearish bias out of the short-term speculators as well. Listen, guys, if you get value out of the daily SPY videos, I hope to see you leave a like on the video. It's literally the best thing you can do for the channel. It takes half a second, and it's free. I appreciate it, and I'll see you in the next one.